Hi, good afternoon, everybody. Yeah, sorry for the delay. I think technology sometimes does let us down, and I think it's been overwhelmed with all the requests. So, good afternoon. My name is Dwayne Newman. I'm a director at COVID Advisory, specialising in various government programs. Obviously, so a lot of the information that we're sharing today, obviously, it's been coming at us at 1 million miles an hour. So we've obviously been trying to spend a lot of our time analysing it to share it with you today. So what I'm going to be trying to explain today, so this is a webinar where we're focusing specifically on government support, government grants and tax incentives. So this is the second webinar. We did have an earlier webinar on Monday where we focused on some of the tax issues and specifically on the customs and trade issues. So if you want to listen to that webinar, you can go and find that on YouTube as well. But today we're going to be focusing a little bit more on what government's doing around, I suppose, four main areas. So there obviously is a bit of an overlap from a tax system perspective, but we are going to be talking a little bit more about grants. Some of those are COVID-19 specific, but we're also going to be touching on, I think, existing ones that are out there that we found that companies are just not aware of anyway. So we'll touch on a little bit of those on the journey. Also touch a bit around what, from a government procurement perspective, specifically on essential and what we call critical goods that government is trying to procure, specifically from the SME sector. So I think there might be some good opportunities for your clients on that. And then a little bit later, Nadia will take us through all the various government loan programs that have been launched through what we would call the government banks, through the DFIs, where they're giving lower interest rates and payment holidays. And then Nadia will also close on how we see the process unfolding going forward. So I think we all know that we're in a lockdown in terms of the Disaster Management Act. It obviously has a worldwide impact, so we're obviously not alone in this. And it is interesting to analyse what's happening, what other countries are doing in terms of supporting business. And from our own research that we have done, it's clearly very much focused on tax deferrals and wage subsidies. So you can see the South African government is very much following global practice. I'm not sure we can say it's best practice yet, because I think it's all unfolding at the same time. But what I can say is that at this point in time, the tax deferral that have been given by the South African government don't seem to be as generous as other, I suppose, developed countries are giving. And that would probably come down to that our tax system is not as strong as in developed countries. It doesn't mean that we mustn't try for stronger tax deferrals. So let's see where that process goes. Also, I think it's really important to bear in mind that most of the measures that have been focused, that are coming out now, are to focus on, I suppose, two main issues, but mainly the first one, and that's liquidity of businesses and mainly small businesses. The reality is big business has got much stronger reserves, a much stronger balance sheet, so they can go to their banks and raise more money either locally or globally to fund their own liquidity challenges in the short term. Unfortunately, small business is not able to do that, so virtually all the mechanisms we see are very much focused on SMEs. And secondly, they're also trying to focus on the growth of manufacturing of essential products in South Africa. What has been clear from a lot of the discussions that have been happening at BUSA and Business for South Africa is that obviously we're very much dependent on global supply chains, even for all the essential products. So when we've now had challenges of goods coming in, from those countries, because obviously there's a global shortage of hand sanitizer and face masks and gloves. It just shows how dependent we are on those global supply chains. So there is a strong drive to create local capacity in essential and critical products, which we'll talk about as we go through this webinar. I think it's also important to bear in mind that I think a lot of the funding that's coming out, obviously government is trying to keep up. They're launching the funding mechanisms, they're opening them. Some are not opening properly. The rules around the programs are not clear, which I think is frustrating people. Some of the little steps that you have to go through in registering on this portal or that portal before you can apply, also sometimes it has been a challenge for companies, and especially small ones, around understanding those processes. So there's often little steps that are missing in the government communication, which makes it a big challenge for business to access the benefits. I think also it's important to bear in mind that even though today's session is very much focused on government support, there is going to be more and more support coming out of the private sector and out of obviously large corporations that are putting funds that are coming out of the private sector to ultimately help small business. What I also recommend is that as advisors in this space, that you make sure that you do keep on top of all the rules and regulations that are coming out. Sometimes it is information overload, but most of those, a good central point to use, which I find quite useful, is www.gov.za, and they publish all the various government regulations on that website. So if you're struggling to find them on individual government websites, generally that's a good website to go to as a central repository for all the COVID-19 publications. I think it's really important to bear in mind as we go on the journey, we talk about essential goods and essential services, and there's now a new concept that's coming out is critical goods. Now all these critical goods and services are published in terms of the Disaster Management Act in the regulations. So the goods in terms of Regulation 11A, Annexure B, and this is the current list. Do we expect this list to be updated? So there was a new gazette that came out this morning, 2nd of April. And that impacts mainly services. So they are updating what they deem to be essential goods and services, because that's effectively, I suppose, the central point in terms of what all the government support that's coming out is linked to how they define essential goods and services. So it's really important for you as an advisor to make sure you understand that you got the latest updated list. What they've also requested businesses to do is to register on that bizportal.gov website to get a certificate. But they have also started to see there are warnings that have been published by the DTI that companies are abusing that to be able to operate. They are now cracking down, and examples like restaurants and stuff have obviously got automated CRP certificates for be essential goods and services. Just because you got one doesn't mean that you're entitled to one. So there have been warnings that have been released already that they will come and prosecute you if you get an essential goods and service certificate issued fraudulently. So just be careful. The next list actually was outdated. So when we put the slides together early this morning, the Gazette dated 2nd of April had not come out yet. So there's a new updated list which will circulate in terms of a Gazette dated the 2nd of April. As an example, on essential goods, they actually left off medicines by mistake. So it was some challenges. Also important to bear in mind that there have been lots of challenges around what can move around South Africa. So what unintentionally, when they said you can only move essential goods around South Africa, which also effectively meant you can only import essential goods. The challenge with that is that all the flights that we're going to be bringing in essential goods stop coming to South Africa, because you cannot bring a plane only of face masks. It's not economically viable. So all the cargo planes stopped coming. So there was a strong lobby for all the transport companies with the Department of Transport, and they have now widened out in this latest regulation dated 2nd of April that all goods can come into South Africa, whether they're essential or non-essential. That cargo can move into South Africa, and that cargo can move to its destination in South Africa, wherever that is. Okay, so it doesn't have to stay at the port. They will clear it, and those goods will be moved by the transport company around South Africa. So that's a recent change because it created all kinds of chaos. So all essential goods and non-essential goods can move around if they're imported, but obviously all non-essential goods manufacturers are not open. Okay, so a lot of stuff will be stored on site for non-essential good manufacturers. Okay, so that's just, I think, just really all the essential services. So I think just it is a moving thing. So if you've got some of your clients who are not on the list and they're all stressed, they do need to make sure that they do talk to BUSA for them to be added to the list, because I think a lot of the stuff is just unintentional when you've got people in supply chains, because remember, it impacts the whole supply chain. So if you're just making diapers, you can't just get the diaper manufacturer to be essential. It obviously has to be the supply chain that goes into the diaper as well. Okay, so I think it's just really important to make sure that you understand the essential goods and services in your journey in advising companies, because it does link to everything else we're going to be saying today. So next item I'm just going to touch on. I think there has been a couple of presentations on this, but just for completeness sake, a quick sort of rundown on the deferral mechanisms again. From a tax perspective, I think the pay-as-you-earn, I think that's become clearer. I think obviously that 20% is a pay-as-you-earn liability. Obviously a big issue to many SMEs. Pay-as-you-earn, if you're employing people, is obviously a big cost every month, and you have to pay it every month. Interesting enough, when they published the explanatory note and the new draft legislation, the annual turnover obviously not exceeding 50 million, but they're referring to the 2020 and 2021 year, and obviously I assume they're saying that because obviously companies it's effectively projected turnover as opposed to only prior turnover. So that's going to be interesting to see how that specifically that plays out. It's also clear that it's from 1 April 2020. Now that effectively means is that it impacts pay-as-you-earn that's going to be made on the 7th of May, not on the 7th of April. So there was some concern that that it would be for the 7th of April payment, but that's effectively relating to your March pay-as-you-earn, not to your April pay-as-you-earn. Okay, Corin did cover a little bit earlier all the provisional tax. Now, obviously the issue for this is obviously under these times, is this really a really big benefit? So obviously now only paying 15% of your provisional tax payment for if your year end or it's due between 1 April and 30 September. Obviously normally it's 50%. So it's a 35% benefit. So I think the provisional tax, I think most people who are in business do understand that generally you only pay tax when you're making profits, but it can be a benefit for smaller companies who have been making profits and would be making provisional tax payments between those periods that on the slides. Okay. Just I think a couple of issues to reinforce around VAT, and I have seen quite quite a few, I think, misinterpretations that are in the market. I've seen letters coming from businesses saying they're not paying VAT this month on all the invoices they're receiving. Let's make it quite clear. Currently there's no VAT deferral in the legislation. The only thing that has been published is for imported products, where you are allowed a rebate of customs duty, and a specific rebate item where you need a permit from ITAC, which is the International Trade Administration Commission, and they're currently only giving those to what they call critical goods, as opposed to all the goods listed on the essential goods list. So you need that permit to be able to utilize that rebate item. So there is no exemption, no zero rating that has been announced on any local sales. So even if you are selling essential goods or critical goods, if there's a local sale, that will follow the normal VAT rules. So there's no changes in the VAT legislation around local sales. Also no VAT deferral, so you have to pay your VAT. If that was due yesterday, you'd have to, or sorry, on the 31st of March, it would have to be paid. And obviously at the end of, if you're paying every month, at the end of April. Obviously, in terms of other jurisdictions have been a little bit more generous and have put some VAT deferrals in place. But for South Africa, currently there is nothing. Okay, so that's, I suppose, some of the high level around the tax deferral mechanisms. Next item we're going to move on to is grant funding. Okay, so I mean, the reason I've put the employment tax incentive as a grant, okay, is because it's extra money. So government is giving you an extra incentive to your employees to effectively help you with ultimately keeping those employees employed, increasing it from 1,000 to 1,500, and taking away the age limit, and also taking away the 24-month rule that was in the normal ETI program. Okay, so I think those are quite big changes, especially for companies who have got large amounts of employees, especially for those under the 6,500 rand pay scale range. Also important to bear in mind that now you can start claiming this every month, as opposed to the normal ETI that's every 6 months. Okay, so just make sure that that obviously you're registered and you obviously claim the increased amounts, and start doing those calculations now for claiming at the end of the month. The next one I've included is the temporary employee relief scheme. There obviously seems to have been lots of, I think, if misinformation is the right word on this program. Ultimately, it's a whole separate scheme. So even though it's funded ultimately by the UIF and it's run effectively by the Department of Labour, it is a separate program. But it is important to bear in mind that you can't put two claims in for the same thing. So you can't be claiming under normal UIF benefits and under this program. And effectively, it's meant to be covering where your operation is closed. So again, where's that focus going to be? It's going to be focused on companies who are making non-essential goods. So they've had to close their operations because of they're not allowed to operate. So manufacturers of clothing, as an example, they're not allowed to manufacture because they're not essential goods anymore. So it's, I think, really important to understand that this you actually have to close. Also important that you don't have to have any UIF credits and stuff. It's so they obviously relaxed a lot of the rules. And also normally a lot of UIF processes, it's the employee that's claiming the benefits who's lost their job and unemployed. Obviously, if they had to do that, that would be complete chaos. You can't have a million people going to apply for UIF benefits. That would just be impractical. So effectively what they've done is the company is going to be applying for the benefits, and then they pay over the benefits to the employees. Okay. How does it practically work? And I've tested this myself. You just send a blank email requesting all the forms. So all the forms are not on the website, so you can't find them. You have to send an email to that COVID-19 TERS at labour.gov.za website email address, and you'll then get all the forms back. What is important to bear in mind that is that you must fill in all the forms. Okay, they've made it very clear is that if you don't get all the information that they require on those forms, you will not get paid. Okay, so companies I've been talking to who have tried to make submissions and the information is not complete, it just comes back saying incomplete. Please submit all the information for us to process it. Also, what they do clearly say is that their employer can pay, so you can use this as effectively a top-up payment. Obviously, there are caps on the benefits. So obviously, for your top earners, it effectively caps out at 38% of the 17,712 Rand a month, which is effectively 6,730 that you then get from the UIF process. So that's the maximum employer could get. And obviously, the employer could then top that up. So they could use the 6,730, pay the employee, let's assume they were earning 30,000 Rand before, get the 6,700, and the employer could pay the difference. But they do say that you obviously have to enter into written agreements if you've got a decent number of employees. I've been speaking to a couple of companies, they've got 400 or 500 employees that they have to pay, and they obviously don't have the cash flow to pay them. So this is going to be quite a big, on that number of employees, obviously quite a significant amount of payment. Okay. Also, they say quite clearly, you obviously have to set up a separate bank account, or just clear out an existing account so that you can actually track the stuff, track the payments. I've also included the website there, so you can go and see some of the information yourself. And we've done that for all the slides, just all the links to the underlying information that hopefully can help you all. Next thing I just want to talk about, and it's really linked to the essential goods sector. I mean, DTI does, the Department of Trade and Industry does have an agro-processing support scheme, okay, that has been around for about 2 years now. It is a grant in the agro-processing value chain, limited at 20 million Rand per entity, and it's effectively covering, it's a grant, so it's non-repayable. 20 to 30% on capital costs. You must be level 4, and the big challenge we're having with this one is you must purchase 30% of your supplies from black-owned farmers. Okay, so in talking to your clients who are in the agro-processing value chain, and they are trying to supply into the food value chain because it's an essential good, they're looking at financing. Of that, it is important that they must not forget that there are these grant programs available. We are in discussions with the DTI around, are they going to be relaxing some of their rules around the programs? We know DTI is open, and they have put mechanisms in place to operate during the lockdown. And there is a specific contact list for all the DTI incentive programs that they have published on their website. Second thing to bear in mind is the other DTI incentive program that has been getting a lot of press over the last 2 years is the Black Industrialist scheme. Maximum funding 50 million Rand per project. Grant ranges between 30 and 50% of mainly capital costs. It does not cover acquisitions. So again, if companies are in the essential goods value chain and they want to expand, buy new machinery, and they are 51% black owned, they are entitled to apply for this program, which is operational and has got funding. Next thing I'd like to talk about is government procurement. And what I mean by that is that government wants to use its procurement muscle to help SMEs and to buy essential goods and services from SMEs specifically. So through the Department of Small Business, they are putting out effectively tenders to manufacture what they would call these critical products in the hygiene, medical goods, food items specifically. So they published a document, which is, and I'll put the link in there for everybody, a request for proposals, and it's open up to the end of April. So I think it's really important that one is you understand what they're looking for, advise your clients, and make sure that they submit tenders to supply these goods. Now that's obviously where you're going to start looking at this as a value chain in advising your clients. So there's government grant support through the DTI, there's financing from the DFIs, and then there's government who will then buy the goods. Okay, so I think it's really important to look at all the support from government as a value chain and not as individual interventions. You need to understand all that's coming out of government. Anything else I want to talk about there? Yeah, and obviously it's really important that all your SME clients do go register on that smesa.gov.za portal. You cannot submit tenders without that. Also, they need to be registered on the central supply database of government. Obviously, there has been some talk around in the speed to buy this. Is there going to be a lot more challenges around fraud and corruption? Yeah, I mean, that probably is a good argument, but we've seen it quite quickly, and I think DTR's notification on the CIPC abuse, I mean, it didn't take them long to work out that there was abuse and start issuing warnings to companies for the abuse of the system. So they're picking up on the abuse really quickly. So my warning to everybody out there would be very careful around trying to abuse the situation and get around the rules just because of they trying to do things quickly. Yeah, so that's me on the initial introduction to the various government programs. We'll now break for a little while, and then Nadia will be picking up and taking us through all the various loan funding from the various government institutions. Thanks, everybody. Thanks for listening.
On government grants and deferrals from the tax side. Just a little bit about who we are. I sit on the incentives steering committee within SITE and on raising finance for the past 10 years with my sister. And really just want to share some information that we have around specific DFI COVID-related loans and funds available. Interestingly enough, there's already 8 billion rand that's been mobilized through 13 odd incentives in terms of cash incentives. So it's really great to see the efforts that are being put in behind the scenes. Let's get into some of the detail. First and foremost, we've got the IDC MCEP loan, which is specifically for COVID essential product manufacturers. It's administered with the IDC. There's a fund value of 300 million rand. The maximum funding per transaction per entity is 30 million rand. there's a fixed interest rate of 2.5% per annum, which is fantastic. We've had some discussions with IDC, and they've assured us that they're really looking at a different approach in assessing businesses for this funding. But what's critical is that the businesses that apply are already manufacturing these products or similar products and are operational for at least a year. So this is how IDC is getting through the process faster to get product into the market as quickly as possible. There is an encouragement for a level 4 BBBE status, and it's very important to also have some contracts or purchase orders, or be in a position to actually show that you're able to access the relevant markets. There's IDC COVID fund, which is specifically for essential product manufacturers and suppliers. So interestingly, here IDC typically only funds manufacturers, or primarily manufacturers. For this specific fund, the IDC is allowing for the financing of contract finance, import finance, revolving credit and guarantees for imports as well. The pricing is at prime plus 1 per annum. On the loans, and on grants is 2%. These are shorter term facilities, so this is a maximum of 3 months, including a moratorium payment. So when we look at it, and again, the primary objective from the IDC is to say they're looking for those with track record in manufacturing or supply of a comparable product. It's all about the ability to deliver. Things like your tax clearance certificates are still going to be required, so please ensure that your clients that are applying are compliant, that they do have a level 4 BBB, also in health applications. And an important one is that businesses must be profitable prior to an application. So the objective of the funds from the DFIs is to support businesses who were sustainable prior to COVID. The applicant must be a vendor with government, multinationals, or retailers, and be a South African legal entity. The next fund is Tourism Fund, which is through the Department of Tourism, and it really, it's an industry that's been very badly hit with COVID, with the travel restrictions. The objective here is to support businesses in the tourism sector, turning over not more than 2.5 million rand. Again, tax compliance, registration for employees is required, and it does come down to the viability of the business. Importantly here as well, there is a view that Black ownership is a requirement and a legally registered South African entity. Again, as with Dwayne, you've got the links at the bottom. You can go and get further in for some detail. Next up is the one from the Department of Small Business, the Debt Relief Finance Scheme, which most would have heard of. It's the first scheme that was put into the market. The fund value is 500 million rand. The big thing around qualification criteria here is that business must be 100% owned by South African citizens and have at least 70% of its employees be South Africans. The form that's available online is it's an online portal, but there is also a manual process that needs to be looked at. We will send the manual form through. Next, we have the Business Growth Resilience Facility. So whilst the debt relief funding was for any small business really that qualified and wasn't specific to the essential goods supply, the Business Growth and Resilience Facility is to support those who are looking to take advantage of the opportunities in supplying COVID-related products and services. So again, here it's a fund value of 500 million rand. Still, the requirements of 100% owned by South Africans, and the 70% by 70% employees being South African as well. And the application process is the same as the previous slide. We then have the NEF loan specifically for COVID, and a 200 million rand fund. It's for Black businesses to purchase machinery, again, to supply into COVID-related products, being your hand sanitizers, your disinfectants, hand soaps, etc. The cost is great, offered at 0% in year one, and then fixed at 2.5% thereafter. Your amount that you can raise is anywhere between 500,000 to 10 million per client. The business partners administered COVID-19 SME fund is the Rupert Foundation facility of R1 billion, which you would have heard of in the media. And it's really there for helping with working capital. So salaries, rents, hire purchases, loan installments, etc. The fund, out of the R1 billion, 900 million is being administered through business partners, and the other 100 million is being administered by PwC specifically for sole proprietors and partnerships. So there's a clear distinction between the process to getting to each of them. We're going to be focusing in this slide around the business partners specific fund. There we're looking at a transaction value of between 250,000 to R1 million. The cost of finance is also very favorable. Month 1 to 12 is at 0%, with payment holiday for the first 12 months, and there's no early payment implications on this. So if in month 11, on day 29, you decide to pay the full amount that you receive from business partners, there will be no interest that you would be paid. From month 12 to 60, it's not linked. And the big thing here is that whilst a business may be approved for 250 or 700,000 rand, or million rand, whatever the case might be, the disbursements are done monthly, and it is not a lump sum paid into the business. So that's quite an important thing to remember. An absolute non-negotiable requirement, and we had business partners was trained on this yesterday, and we had training thereafter on it. Please make sure that February 2019 acts are signed. Without that, your clients will not be able to access this fund as at the current requirements. They must be fully compliant with tax and other matters, as well as being formally registered entities. One differential that's quite different to the SME Debt Relief Fund is that there is not a requirement for ownership to be with South African citizens. So if you've got clients who are foreign nationals, but who have permanent residency in South Africa and the entity is registered in South Africa, those businesses would qualify. Again, so business partners ordinarily has restrictions around specific sectors, and those still remain being direct agriculture, non-profit organizations, underground mining, and lending. We're expecting an auto fund to be made available, up to 6 billion in there, but the guidelines have not yet been finalized. So this is for all auto-related value chain suppliers, and we'd have a look at it once the guidelines are out, and we can come back to you. Then, interestingly, there's also the South Africa Future Trust, and that's really to help SME employees who are at risk of losing their jobs. This is the Oppenheimer Fund, 1 billion rand fund. It's for businesses who are turning over below 25 million and have been trading for at least 24 months. The business must have been sustainable on 29th of February 2020. It's a 5-year loan, interest-free. What your clients need to do is get in touch with their banks, and the banks, the major banks, are all handling those applications directly. So that's it from me. I'll be leaving you now. Thank you all, and
Hi, everybody. Yeah, thanks, Nadia, for that. I think now there's been a couple of questions that have been posted, but maybe just to, I suppose, to wrap up quickly. I think the reality is we do need to make sure that we do acknowledge that this is a new way of working for everybody, for us as a private sector, for government, and there's a challenge of how do you handle of doing things quickly versus bureaucracy. I think we spend most of our time handling government applications, whether it's through SARS, DTI, any government department, and generally time is, we were always impatient as advisors or businesses, and government doesn't often seem to get that. So I think there's going to be lots of pressure on government to how do they manage and handle bureaucracy. Also expect changes. I think I said it earlier, just make sure you keep up to date in terms of what's happening in the regulations. I found that it has to become a daily discipline currently. Just make sure you go to that government website, make sure you understand what's changed in those regulations, because it will have an impact on everything that you do in terms of, is it an essential good or service business that you are advising. Also, I think just make sure that you understand that the rules aren't always going to be clear. They're going to be unclear to us as advisors, to companies, and they're also going to be unclear to the people administering the programs on the other side. So I think it's just important to bear in mind that we are in a challenging time where the rules are not clear. So just a couple of the questions that have been posed around essential goods and services. So the first one was, can a sole proprietor be registered for essential goods and service certificate? Our understanding is not, because it's ultimately linked into the CIPC process. So the company's registrar's office. So if you don't have a registration number per se through the CIPC, you will not be able to get an essential goods certificate. However, does that then mean that you're not an essential goods or essential services company? No, that it does not mean that. What they have said is they've said that that certificate is effectively voluntary, and they have had obviously exemptions for things like spas, shopping, grocery stores, and because most of those are all run as sole proprietors. So I wouldn't stress so much. It's really a self-regulation process. Just make sure that you are clearly covered in the Disaster Management Act as an essential goods and services a company. If you're outside that, do not take the chance. They will be prosecuting. Okay. Next question is, can a CC who needs financial leave to cover running costs only apply for small business benefits? It's got no staff, not an essential need, is not registered for UIF, and they are tax compliant. Not sure what specific program they're referring to. Might be I think the TERS program. So obviously you do need to be registered for UIF for that program, because it's run through the UIF process. And also as well, they are asking for proof of what you're paying your people. Obviously, a CEC might be employing one person being itself. Obviously, you do need to prove payroll to be claiming the benefits under the TERS scheme. Next question: the TERS directive talks about complete closure. What happens with employers who have some colleagues who are working from home, management as an example? But obviously the people in the manufacturing operation are not working. So they're saying trading continues, but only some employees are working. I think what they're trying to cover here is manufacturing sites have now stopped working. Okay, so you might have some management working from home, but the actual operation is closed. So if you go to that manufacturing operation, it will not be working. So I think those are qualifying companies. I am working with some companies where the senior management are working from home, but the whole site is closed because they're in a non-essential sector. My interpretation of that is that they would qualify. Next question is, when an employer without payroll applies to TERS, should the prescribed template still be a CSV file, or will UIF accept a simple Excel file? So again, I think my point there would be, I think submit what you've got, try to use the format what they send you. So when you send the email to that COVID-19 Labour email address and they reply back to you with templates to complete, please complete the template they send you, as opposed to reformat it. Obviously, even in Excel, you can save files as CSV files, even from Excel. So I would suggest you follow the rules to the letter, and make sure that if you are going to be apply as soon as possible. Ultimately, there is limited funds for all these programs, so make sure you apply as soon as possible to that email address. Next question is, for a company with less than 10 employees, you don't have to complete a memorandum of agreement, but can apply for TERS. Is that correct? That is my understanding. I think they've only put in that MOA for companies with more than 10 employees. That's my reading of the rules and the Gazette itself. Next question is, I have a dentist as a client. They are not allowed to use all their equipment, thus close this practice for now. No employees at practice, but it will still assist patients in case of emergencies. Will he be able to apply for TERS? Interesting question. I would assume medical is still an essential service, from my reading of it. I don't think they've made it that specific that it excludes dentists. I think dentists is a medical practice. So I'm not sure why they've closed the practice for now. Maybe it's because no clients can get there. But I suppose the question is, can you apply for TERS? My understanding is there has to be a payroll, so I'm not sure how the dentist is paying himself. Is he not paying himself a salary? So there's no payroll proof. But again, so simple rule is you must go to complete all the forms that they sent you from the Department of Labour when you send it to that email address. If you can't complete the forms, they're not going to process your application. Okay, any other questions that have come through? Yeah, no other questions. Let me see. Got any other questions? No other burning questions. Okay. Yeah, so there's no other questions. Thanks everybody for attending the webinar. Obviously you can obviously watch it on YouTube, and also if you've got any other questions, send them through the site. Also, for all the questions that we haven't been able to answer, they will be collating and setting up a few frequently asked questions with answers, which will be sent out. Appreciate all your time, and be safe out there. Thanks very much.
First of all, the NEF benefits. The question is, will sole proprietors be given a chance to claim these benefits? The NEF refers to CIPC documents as part of their requirements. So what we're finding around sole proprietors in general is that there is a lot of uncertainty as to what sole proprietors can and cannot qualify for. And that certainty will start coming out. We do know that there is the grant facility that's sitting with the PwC on behalf of the Rupert Foundation and Remgrow. That's a 100 million rand facility, and it's going to be a 25,000 rand grant per SME, and that's only for sole proprietors. So that's really where at the moment one of the big sole proprietor options comes from. The other being from SAFT, which is the fund through the banks for employees. So a sole proprietor can qualify, and there really what's required is the sole proprietor's ID number. In terms of the next question then is, with a relief fund, what are AFS? Apologies for using acronyms. We live with acronyms all our lives. It is for annual financial statements. So signed annual financial statements are required on the relief fund through business partners, and for most of the other incentives as well, and facilities that are available. With regard to the debt relief fund from the Department of Small Business, the question is it a grant or a loan? It is a loan, so repayments will be required. That's it on my side. As Dwayne mentioned, we'll be taking additional questions offline, and we'll come back to you with some frequently asked questions. Have a wonderful day, stay safe and healthy, and take care.